Welcome back to Insightful Value, where we uncover undervalued companies and break down what's really going on behind the stock price. Today we're digging into PT Bank Central Asia, also known as BCA, a giant in Indonesian banking whose stock is looking surprisingly weak. Stick with me, because this could be a story worth paying attention to. Quick reminder, this review is for informational and educational purposes only. It is not financial advice. Don't forget to subscribe to the channel, give this video a like if you find it useful, and drop your thoughts in the comments. Let's jump in. PT Bank Central Asia is one of the largest private banks in Indonesia, and in fact, it has long been regarded as one of the most profitable and best managed banks in Southeast Asia. Its core business is commercial banking. It offers retail deposits, loans, mortgages, payment services, and corporate banking. It's especially strong in transaction banking and low-cost funding thanks to its dominant position in current and savings accounts, which make up a huge portion of its deposit base. That means very low funding costs compared to peers. From a value perspective, BCA has historically been a high-quality franchise. Strong net interest margins, resilient earnings growth, and stable dividend payouts have made it a market favorite. But right now, the stock is trading weaker, and that's got investors asking questions. Financially, the bank's net interest margin in 2025 has been under pressure. Rising funding costs and slower loan growth in a tightening credit environment have squeezed profitability. Second quarter 2025 results showed net profit growth slowing to the low single digits compared with double-digit growth in previous years. Loan growth has decelerated to around 8% year-over-year, down from historical levels above 10%. Fee income also softened as transaction volumes cooled slightly in a weaker domestic economy. Revenue for the first half of 2025 came in nearly flat, while operating expenses continued to climb, putting further pressure on the cost-to-income ratio. Dividends, however, remain a bright spot. PT Bank Central Asia has steadily raised payouts over the past decade, with dividend per share more than doubling since 2015. In 2024, the bank paid out a dividend yield of roughly 2%, with a payout ratio close to 50%, balancing growth and shareholder returns. Stability in dividends makes BCA attractive for income-focused investors, even if the yield is not the highest in the market. So why is the stock down? There are several factors. First, weaker than expected earnings in 2025 have disappointed the market. Investors had grown used to strong profit expansion, so even a small slowdown hit sentiment. Second, concerns about Indonesia's broader economic growth and softer consumer spending have made investors cautious. And third, global risk-off sentiment and outflows from emerging markets during the summer of 2025 put extra pressure on Indonesian equities in general, with BCA not immune. The risks here are worth considering. If economic growth slows further, credit demand could weaken more, non-performing loans could creep higher, and profit margins could remain squeezed. On the flip side, why might someone consider investing? BCA remains one of the most resilient banks in the region, with a fortress balance sheet, high return on equity above 15%, and unparalleled customer deposit base. If Indonesia's economy stabilizes and loan growth recovers, the bank is well positioned to bounce back. Plus, management continues to focus on digital transformation, mobile banking, and fintech partnerships to capture younger customers, which could support long-term growth. If you're wondering whether this is an opportunity or a red flag, the answer really depends on your time horizon and risk appetite. Right now, the stock price looks weak mainly because of temporary headwinds, not because the company's fundamentals are broken. If you'd like us to create a review of a company of your choice, we charge only $20 per review. Just contact us at info@insightfulvalue.com. At Insightful Value, we provide in-depth analysis of undervalued companies, break down the numbers, and explain the story without the jargon. Whether you're a seasoned investor or just starting out, Our goal is to simplify the complexity and give you insights you can actually use. For more info about this and other companies, head to insightfulvalue.com. That's all for today's review of PT Bank Central Asia. Don't forget to subscribe to our channel, like the video, leave a comment, and check out insightfulvalue.com for more deep dives.